Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex market outlook for the week of January the 11th, 2010. Now, with that said, we're going to have a volatile week here. We didn't get the number we wanted from the U.S. non-farm payroll, which is clearly going to probably, well, I'm not going to say clearly. I'm going to say the probability is that's going to, in the short term, put pressure on the U.S. dollar index. In short, that's going to put pressure on the U.S. dollar throughout a number of the different currency pairs. So we're going to start our presentation this week with the U.S. dollar index. We can see that our key level of support comes in at 77.36, 77.62, and 77.58 with a close of 77.47. We're already below the 3 and the 8 day exponential moving average from Vantage Point. 77.36 very likely to come under pressure in early Asia trade on Sunday night. What we can identify here is that the market has not been able to, there has been no sustained break of the 18-day predicted moving average from Vantage Point in this 77.36 range. Our predicted TSI from Vantage Point in heavily overbought territory. However, our predicted MACD is still above the zero line, but we do have a crossover to the downside. Predicted RSI sitting at essentially trend-ready levels. Now, looking closer at the U.S. dollar index, I'm going to bring this up so everybody can see this. We're going to spend a little more time on this U.S. dollar index because it's certainly worth a look under these conditions. And we want to see how Vantage Point is going to forecast this. So we're going to look at the short-term crossover and have a look at this. We're running pretty much a flat signal on the short-term crossover. Now we're going to go to the medium-term crossover from Vantage Point. We can see that that's crossed over to the downside several days ago. However, the market, these candlesticks these are daily candlesticks. We can see that it's moving on either side of the simple moving average and the predicted moving average. So there's no clear signal there, however, tipped to the downside. Now, a point of concern here is the long-term crossover from Vantage Point. That has crossed over to the downside also. All three of these indicators are suggesting further pressure on this U.S. dollar index. Now, the triple EMA crossover has not. The triple EMA crossover is a final confirming indicator of a trend reversal. So it's very important to take that into consideration that we do not have that. We're actually, I think, several days, possibly weeks away from confirming a complete reversal in the U.S. dollar index, despite the volatility we're likely to see on Sunday night, Monday, and probably part of Tuesday. It's still my belief that the U.S. dollar will stabilize and the labor report will be looked at through somewhat of a different light by the fact that it is improving. The reality is, a year ago on that jobs report, there was a loss of some 700,000 jobs. This month we've only lost the U.S. has only lost 85,000 jobs. That is a significant improvement, despite what other market analysts may say, despite what how it's viewed for the currency. In my eyes, it's still, we're in an improving situation that is only going to get better. The worst, I believe, is behind us on the payroll numbers, but again, we're going to have to, that's going to be left to be seen. Now, as we do in each week, we're going to go into the major commodity indexes that affect the Forex market. Crude oil, clean breakout here, we can see to the upside. Major support is all the way down at 78.09. We've closed at 81.37. Very important to point out that the further the market moves away from the 18-day predicted moving average from Vantage Point, the more likely it is it's going to retrace to that number. That is definitely something to keep into consideration. We've had a strong move up here. The payroll number, the U.S. non-farm payroll, I'll be speaking about that throughout this entire presentation, but the reality is all of this is played in to crude oil moving higher. Now the question is, can it sustain these gains in somewhat of a soft economic recovery? I don't believe it can, but that's left to be seen. So clearly we're going to be watching Brent crude for a retracement and see where that progresses. Now looking at gold contracts, we don't completely have that buy signal reversal higher confirmed, but it certainly looks like it's going to. We have the 3-day crossing over the 8-day and the 18-day. However, the 8-day is essentially riding piggyback to the 18-day predicted moving average from Vantage Point. Predicted TSI from Vantage Point is rolling over long. in oversold territory. We've got a crossover on the trigger. MACD, exact same scenario. However, still below the zero line on the MACD, which is a point of concern. Now, much like the U.S. dollar index, which I've talked in the past, if we go back a year ago to date on the gold contracts, I think it's important to review that. You can see here that gold sold off. You know, we sold off here, but a very similar situation happened last year at this time. If we look at January 8th last year, it was selling off, and then we consistently moved higher on gold, and essentially we've moved up and down a bit, but we've really just extended higher. Now, if you recall my presentation on the U.S. dollar index, last year at this time, gold contracts and the U.S. dollar index moved up together for 4 months. This happened. So from mid-December to mid-April, the U.S. dollar index, the price of gold, both consistently moved higher. So it's very important to look at these price patterns to see, even though gold is moving higher, that does not necessarily mean that the U.S. dollar index or the U.S. dollar in general is going to move lower in the near term. And in fact, the price patterns that I've pointed out here suggest the exact opposite. So very important that we keep these things take these things into consideration and not just look at one particular market or one particular scenario. Just because we got a bad jobs report, is that enough to to cause the U.S. dollar to completely collapse? Well, I don't believe it is, but we'll certainly see how this plays out. We'll be looking at it throughout the week. Now, getting into our regular presentation on the majors, we're going to be looking at starting with the U.S. CAD. This thing here, heavily oversold, continues to move lower. However, we're likely to move back into we can see this individual candlestick here, down here, just above this 102 range. I can see this being tested very soon. However, very important to remember that U.S. Canada relies heavily on crude oil prices. So if you take into consideration what I've said, that crude oil, Brent crude, is heavily overbought, it's extended higher, it's moved a considerable distance away from the 18-day predicted moving average from vantage point, and the likelihood of it retracing is very, very high. Now, if crude oil retraces, which I suspect that it will, that will put upward pressure on U.S. Canada, not downward pressure. Also important to point out that the U.S. or that the Canadian dollar had a very, very weak job report, much like the U.S. Now, if we take into consideration the weak jobs report from Canada, potential for falling crude oil prices or retracement in crude oil prices, whichever way you want to look at it, that would suggest there's a good buying opportunity on U.S. Canada between